Hello, then welcome. This is Brandon Waddell, Charter Market Technician, and I'm taking a look at the U.S. equity futures, the equity index futures specifically. As you can see, I've got them all studied starting out here from the January 4th peak that we had in the markets, and our lead to the downside has really been kind of a toss-up between the Russell and the NASDAQ. The NASDAQ is actually still one of the weaker indexes, while the Dow is the strongest, and then the S&P is kind of caught in the middle there. So when you take a look at these indexes, got to keep that in mind. You can kind of follow the leader a little bit here. Looking at the NASDAQ on a weekly chart, we are still in a bearish trend. We have lower highs and lower lows, which is indicative of a downtrend. And you could see a couple things happened. On our recent rally, we failed to move the RSI up above 40 by much. We couldn't even break 50 or get above 60, which is our bullish barrier. As a matter of fact, by the end of the week, we ended up closing below 40 on the RSI, and that's a sign that we should be able to take out the lows from the past 2 weeks. So coming up next week, or this week actually, going into next week, we'll probably break that low of 13,706. There's a higher probability of breaking the low than there is of breaking the high of 15,200 area back here. So it looks as though we're going to be continuing our impulses down. We had our move, impulse down, correction, and that gives us a downside target right now of about 13,434 for the first projection to the downside. We'll see if there's anything different than that, but that looks like it could be the next target. And there's not really a good demand zone here, honestly, because that's a retest of some prior demand, perhaps. We have, actually, drop, base, rally. Yeah, that's probably our next weekly demand, which is right there. Again, leg in, basing, leg out with some follow through. But we're not going to get down that far, I don't believe. We could have a very large candle like we had about a month ago, but most likely we're just going to have some weakness coming in, break that 706, maybe tag the 13,434. Not quite sure if we're going to be able to make it down all the way there. Anyway, looking at the daily chart here, you can see that we had some pretty deep retracements. We did have an impulse down, like I said, and we retraced pretty well last week. And let's see, there it is. Looking at the retracement, we pulled back about 50%. That was the highest close that we got. And if you take a look at from the most recent move down, there was actually a pullback about 61.8%. We went a little above that, so it wasn't exact. But really, I'm measuring from the overall move right here, this big impulse down. There it is. And you can see that there we end up having the open and the close right in the area of 50% retracement. So again, we're in our next phase, which should be continuing the impulse down. You can see this was our correction. Our impulse down should be able to continue. Even if we look just from this impulse, instead of the big move, let's see if there's any kind of overlap. There actually is. Look at this. The 1.272 and the 1 are almost identical to each other. So if I change the coloring here for this extension, let's do settings, just so we can see the difference between the two. And we'll go with that. And we'll do a brighter red. There we are. There you go. You can see there's the overlap right around the low 12,300 area. So with that, that could be the end of this week where we end up going, as we should be able to, again, easily break the 13,706. That's what we're seeing. There's nothing but weakness here. We can't get into bullish territory. Can't even get above 50 with a close on the RSI. So that's extremely bearish and suggestive that we're going to continue moving down this week. If we go down to the 4-hour time frame, let's take a look, see if there's anything different there. And it looks about the same. Again, I can try to do some more projections to see if there's some overlap. So let's go ahead and do that. We have our impulse down, correction back up. Here we are. And let's change the color on this. Use green. There we go. So it changes color, and we can see if there's any kind of correlation again. Not so much. We got 2.618, but this gives us some other targets along the way because we're not going to impulse directly down. Now, we did a little bit of a correction, as you can see, last week. And that would have been on the 11th, where you had this little bit of a pullback here before we started moving down. So it's interesting. Notice we stalled out right at the 100% impulse. Let me go ahead and clean this up. There we go. So now you can see we had impulse, correction back up, and impulse, and look at where we stalled, right at the 100%. We basically duplicated the preceding impulse right here. So what we're likely to see, if we do get a pullback, we could pull back a little bit, but most likely right into this area as a supply zone before we continue to move down yet again. And that is the area of supply right here. Let me go ahead and clean this up. There we go. So you can see we have that as an impulse. We can also measure to see if there's some sort of retracement value in that area. And believe it or not, there is. So we're looking at retracing if we can. That is, there's a big if. But if we do retrace, we're going to retrace somewhere between 14,570 to 14,621 before we resume our impulses to the downside. And then we have, again, the target that I would really look for is down here about 13,610 because we should be able to break the 13,706 this week. Now, we may just open up and continue to shoot straight down. And really, the Russell and the NASDAQ are the two weakest. So if any of those markets are going to do it, it would be one of those two. You can see that we finish off with nothing but selling pressure at the end of the day. On Friday, a little bit of buying, but that's just some short closing that happened. So if we open up with a gap to the downside on Sunday night, look for this to continue down. It'll probably be a gap and go. If not, we could get a little retracement, but again, it's not going to be a huge pullback. We would just pull back right about 50% of the previous move before we impulse down. And again, just look for shorting opportunities. And this is probably the best one right there for supply. We could break this down to a 60-minute time frame to see if there's anything else that looks good, but I don't believe so. Nope, nothing else really there. Even the 15-minute, if we go all the way down to that, there are a few other areas right here at the 38.2%. We get rid of the impulses here for a moment. There you go. And we can see if we do retrace back right here at the 38% retracement, there happens to be another zone, drop-based drop that could pause. We also happen to have this area, rally base drop right at the 14,570 from the higher time frame. And then, of course, we run into Fibonacci at 50%. So I think we're going to stall out in that area if we get any kind of a pullback and then impulse again to the downside. So gotta see if there's anything else that correlates here. Let me get rid of this Fibonacci and do it this way from the most recent impulse. Now that wouldn't work. I mean, unless we have a really weak retracement, you would expect it just to pause at some of these areas. We've already gone 23.6, so we may be just continue to push down. We'll see. But yeah, what I'm expecting for the week overall is maybe a little bit of a pullback. At the highest we'd go is about 14,600, more likely right around the 14,500 before we continue to push to new lows. Let's move over to the Russell, shall we? Take a look and see where we're going there. We'll start off in the weekly time frame, and we'll start off with a clean chart. So you can see that we also on the Russell, we are very bearish. We have lower highs as well as lower lows. And we've already done a bit of a retracement. That retracement took us right into, let me clean this up. There you go. And this retracement took us right into a supply zone. Wrong one. Oh, the zones. There we go. So we stalled out just shy of the 61.8% retracement as well as just shy of the supply. And perhaps that was because this was not the leader to the upside. The Dow was. So when we get movement to the upside of all four indexes, look at the Dow to let you know where it's going to stall. However, when we're moving down, the Russell and or the NASDAQ are going to be the two leaders to the downside to let you know where the bottoms are going to be. So this does look like it's ready to drop again. And as you can see, even though they're green candles, they have huge topping tails, which really suggests impulse to the downside. There's a lot of selling pressure there. So I'm going to remove all these drawings once again and give us a projection. Our most recent impulse down, retrace back up, should give us some possible downside targets of 1859 and 1707 for the Russell 2000 on the weekly. Dropping down to the daily time frame, see if anything looks any different here. Doesn't really. We didn't stall out at any kind of supply. Again, though, we weren't at the target security. This should have been the Dow that was leading us back up. And we stalled out before we got to the 2120 supply. But it does look like we're going to continue that impulse down. Not really seeing anything else here. We can go down to the 4-hour time frame and just fine tune this a little more. And you can see on the 4-hour, we did actually stall in some sort of selling pressure that we had right here. We have a Nice little supply zone rally, base, and drop. That actually doesn't qualify as a good zone because we closed outside of the previous candle. So didn't really get a good zone. But that was our zone that ended up holding. Now, the only saving grace on this time frame, let me just check the daily for a moment. The daily, we did actually, no, we didn't make a bottom below or above 40. And we made highs below 60. Going down to the 4 hour time frame, we ended up breaking up above 60, which is somewhat bullish. And our most recent low, as you can see, did not get below 40. So that's showing that there may be a little bit of buying pressure that comes in. Okay, so this has already been a tested supply zone. We may get a little bit of a bounce at the open. As you can see, we've got rally, base, rally going on right there. And we are staying above 40, but we didn't get a divergence. So I wouldn't expect anything big out of this. If we do bounce, we're going to stall out before we make a new high. And as a matter of fact, we may end up stalling out somewhere right around 2050 or 2060 before we continue to push down. That's what I would look for. And ultimately, I don't see anything holding us up here. I think we're going to continue to push down towards that target I mentioned, 1859 to 1707. Even all the way down on the 60-minute time frame, trying to fine tune what might happen at the beginning of the week. We do have nothing but selling pressure here, a couple supply zones. So if we open up and try to rally, I think we're going to be met up with a lot of selling pressure. Like I said, 2050 to 2074. That's a good little supply zone. You have rally, base, and a drop that broke to fresh lows. This has already been tested and used, so there's no more buying pressure left. Now we're still making highs above 60 and below 40, so we got some weakness in the trend. Yeah, that's why the NASDAQ took over on the downside. It's the much stronger downward moving security, but the Russell could take over, but I wouldn't really want to trade it. I'd probably place more faith on the downward movement in the NASDAQ than I would on the Russell. But don't count this out. You've got two levels of supply immediately above where you are. So if we do open up and retrace a little bit, I would expect us to do that and move down to the 1859 before the end of the week, possibly even tagging the 1700 area right here, which is our next target. So moving over to the strong index, that was the Dow. Going back to the weekly time frame to really find kind of overview here, you can see that this is not in a bearish trend, but it's starting to form one. What we had here was a move up with higher highs, and we failed to make the higher highs on the indicator. That indicates what we call negative divergence, and this has not been confirmed yet for the change in trend. And the reason why is because we haven't put in a high. We made a high here, made a higher high. Who knows if the next candle will be a higher high? If this week's candle makes a lower high and a lower low, meaning we break 34,511, we did not get above 60 on the RSI. That happening after the divergence is a confirmation of trend reversal. And I think this has been the last index to kind of be showing, it doesn't show a bearish trend. It's still showing bullishness. So if the last index gives up and finally shows bearishness, then look for all the markets to drop. And again, that'll be led by the NASDAQ and the Russell to the downside. Those are the strongest ones. So if we were done with our move back up, as you can see, we had a bit of a retracement pretty deep. I don't know if it did 78.6, kind of in that area. You see we stalled out there before and then we went above it. But if we're done and we end up breaking the low, 34,511, again, I wouldn't short this market because it's the strongest one. I'd short the weak markets, but I would expect the Dow to run to the downside towards 33,403 and then 31,951 afterwards. Going down to the daily time frame, not really seeing anything different here. Absolutely nothing different. So no real zones or anything else. We do see that we could not get above 60 on the RSI. That is extremely bearish, but then again, we did not get below 40 on this next move down, but we're not done. Going down to the 4-hour time frame, we had a pretty good retracement. I was curious, it didn't quite hit supply, did it? Let's see. Now we have dropped too many basing candles for a good zone there. Anyway, we were trying to move up. We had a nice bullish trend for a while, but that's broken. The fact that we made a couple lows here and we went lower with more momentum to the downside, this looks like we're going to continue pushing down. So if we can get any kind of retracement, it'd be kind of shocking, to be honest with you. This looks really like it wants to continue going down. So if we just use this area right here for retracement, So if we do end up impulsing to the downside, our initial pause points might be 34,433, 34,189, 33,879. Doesn't really line up with anything. Again, I think that our ultimate downward move is going to be to that 33,403 that I have right there from the higher time frame. And that's where we may end up for this week if we start to push downwards again. We did already do a retracement. We could have another one on the smaller time frame. Again, this was, oh, look at that, about 50% retracement. Although I usually want to use, there we go, it's just shy of 61.8. And once again, if we get another retracement from our most recent impulse, I would actually look at this on the 60-minute time frame. There we go. And right here, we've haven't really had much of a retracement, 38% off the lows. And looking kind of weak, it looks like we might just be able to continue to push down. So I don't really have anything to signal any kind of turning point other than we do have a couple of areas of supply here on the hourly chart. So if we are able to retrace a little bit from our bigger move down that we originally had, go back again to the 4-hour chart. Now we've already done a retracement. That's what I don't think that there's going to be another retracement of that size of that time frame. But again, going down to the 60-minute, I just want to see if it verified or correlated with any of these supply zones that I'm seeing. And this is one. We have rally, base, base, drop right there. And we've got the 61.8 in front of that, or inside of that, and the 50% in front of it. And then this one is almost all the way back to 100%. So this is overall looking very weak. I think we could just see a big move to the downside depending on where we end up on or open up on Sunday evening going into Monday, seeing what kind of a gap we end up having. I would measure the gap, by the way, at the open at 9:30 in the morning. If we have a 9:30 a.m. on Monday morning open that's below Friday's low right here, then I would expect that to be basically a gap and go. If we end up gapping open inside of Friday's price action, then expect the closure of the gap first, and that little bit of a pullback before we continue to push down. Finally, going over to the S&P 500, let's take a look over there. And again, on the weekly time frame, you can see that we haven't quite officially moved into a bearish trend, although, let's see, here we have a high, 45.86. There we have a lower high, and the low here was 43.95.50, 43.93. Oh, so we actually officially put in a lower high on this green candle the previous week. That means after a negative divergence like we had here, that's the confirmation of trend reversal. You know, again, we didn't get that on the Dow, but we did get it here on the S&P, and that confirms that we are going into a bearish trend. So that's the start of it. Now, we may not be dropping immediately, but ultimately, we do see there's your retracement, and you got a first target of the retest of the lows at 42.18, with the second target 39.90.50 to the downside is what I'm seeing. If we go into a smaller time frame, I'll do the daily. You can see that we kind of hit the ceiling twice. It wasn't really any kind of a zone. I think it was on the 4-hour though. And we don't really have any more momentum. It's not any less, but it's not any more, really. So we started to impulse yet again down, just kind of what you saw on the bigger picture. Going into the 4-hour time frame, I'm not seeing anything different here. This is not a zone. If we were to retrace again, you know, there might be a little bit of a pullback that we'd see on a 60-minute time frame for measuring for the retracements. Yeah, that would be right here. But overall, I think it looks like we're going to continue to push down to make those new lows. Again, 42.18 looks like a pretty good downside target initially. And ultimately, 39.90, we break that 4,000. That's going to be a huge psychological hammer to the head, so to speak, when it comes to the markets. I think it's going to really drive people to the downside and get very, very bearish if we break 4,000. Even a little bit of trading below 4,000, but especially if we get a close below that. Look out below. And going down to the 60-minute time frame on this retracement, I don't see any kind of supply here at all that I'd play. Maybe down the 15-minute there's something there, but as of right now, we can also look to see on the smaller time frames, we have impulse, correction, and let's see if there's any kind of correlation where these line up. No, not really. I was kind of hoping there would be, but there isn't. So, nope, nothing, not really useful. I'm not going to bother putting that in. Again, I would just look to see if there's any kind of a pullback to any zones that might occur. 78.6. If we get a deep retracement, there's a supply zone there that correlates with the 78.6% retracement, but it doesn't mean we're going to go back that far. I don't see it. If anything, I think we might be done with our retracement and getting ready to gap down and go. So look for some more bearish activity that will ultimately take us to some fresh lows. I think that the bear market is beginning, that we are going to be seeing a lot more bearishness than we are bullishness coming up in the next several months. So just be prepared for that. If you like the video, please hit like and also hit subscribe to let me know. And until next time, trade safe, trade well, and take care.